Porter.
Do solemnly swear or affirm that I will support the Constitution of the United States, the Constitution of the State of Colorado, and the Charter and ordinances of the City of Inglewood, and that I will, to the best of my ability, perform faithfully the duties of office as a member of the Non-Emergency Pension Board during my coherence therein.
I will.
Okay, perfect. Thank you so much. And then we will do Bob Stephenson. Are you able to turn your camera on, Bob? You are. You have your camera on. Sorry. Go ahead and raise your right hand.
Hang on. Okay.
There we go. We got you. All right. So I state your name.
I, Robert Stephenson,
Do solemnly swear or affirm that I will support the Constitution of the United States, the Constitution of the State of Colorado, and the Charter and ordinances of the City of Inglewood, and that I will, to the best of my ability, faithfully perform the duties of office as a member of the Non-Emergency Pension Board during my continuance here therein.
I do so swear.
Perfect, thank you. And if you're able to sign these and then just email them back to me or drop them off, whatever works for you guys.
Okay, great.
We've got our new members sworn in. The next is, I don't know if a member wants to take it over to kind of try to get how you guys want to appoint a chair. We just know it can't be Councilmember Russell. Does anybody want a motion to appoint someone or?
I would be willing to chair the commission
Okay,
if that is acceptable. I have chaired the Sustainability Commission, and I don't see that there would be any problem doing this.
does somebody want to give a motion to nominate Bob as the chair?
Jim Phelps, I so nominate. Bob?
Okay, do we have a second?
I will
I'll
second that motion.
Is that Member Porter?
Yes.
And did anybody else want to discuss or questions before we go into vote? All right, so let's go Member Porter. This will be a yes or no to have Member Stephenson as the chair. So Member Porter,
Yes.
Member Stephenson,
Yes.
Member Fritz Pele,
Yes.
Member Phelps,
Yes.
and Councilmember Russell.
Yes.
We got 5 ayes, so Mr. Stephenson is now your new chair. So if
Great.
you don't mind, do you have the
Good.
agenda in front of you, Bob?
I am just trying to pull it up right now, and I
Okay.
don't. Now I do. We have now to consider the minutes of the previous session. Am I correct on that?
Yes. So we call for a motion and a second, and then I can call the vote. And members, members that were not present before will not be able to vote on the minutes.
Yes. So do I have a motion to approve those minutes?
I move to approve the minutes from November 9th, 2021.
I second the motion.
I second the motion.
Was that Belinda first, or was that Phelps?
It was
Second.
Kelly.
Okay.
I'll defer to Belinda.
Okay, so it's gonna be an easy vote because we really have 2 members. So Member Phelps, do you approve the minutes? Is that yes?
Yes.
Okay, and Member Russell?
Yes.
Yes.
Okay, we just have the
What-
2 members, because I don't.
What
believe-
about Shelley
Member
Fritz?
Fritz, yes, I'm sorry, Member Fritz.
Okay, yes.
Sorry, thank you. So we've got 3 ayes. And that's all we can do for the minutes at this moment. All right, member, or Chair Stephenson, if you want to take on to the next
So-
agenda item?
Yes, do we have anybody wanting to make public comment?
I do not see anybody either than just the ones that we've invited to the meeting. So I did not, we did put a link on the website and nobody has joined us for public comment.
I did not really expect that we would. Okay. Hearing none, let us move on to the Gabriel Roeder Smith and Company item.
Thank you very much, Mr. Chair. I'm Paul Wood with Gabriel Roeder Smith. So for the new board members, nice to meet you and congratulations. I am the actuary, and so we're beginning the process now of performing our actuarial evaluation, which is done as of January 1, 2022. And so part of that is collecting the data, and so we've initiated that process. And then once we have the census data, we'll run our liabilities, we'll receive asset information and produce two different reports. The first is a GASB 67 and 68 report, which will then roll up into the city's financials. And then there's a funding report that's going to give us an idea of what the city should contribute in the upcoming year. So right now, there's really not much more to report than that, other than Christy back in our office in Denver has got that process going. And then also I want to offer to the new board members, if there are any questions, or even existing board members, if you have any actuarial questions, please don't hesitate to reach out and we can talk for as long as you'd like. I'm one of those people who enjoys talking about this nerdy math stuff, so I'm available anytime. But again, congratulations to the new board members, and that's all I have for today. Thank you.
Thank you. Great. Are there any questions? Hearing none, let's move on to retirement approvals and notifications. Have we any? I see none listed. I do not.
Is Jackie on still?
I am. We didn't have anybody listed for this item.
Okay. Hearing none, then we can move on to portfolio solutions. And under that, we have the update to the status of changes in the investment portfolio.
Great. Well, thank you very much. My name is Wendy Dominguez, and I'm the president and co-founder of Innovest Portfolio Solutions. We've been privileged to have been working on this plan for over 20 years, and we're thrilled to meet the new members and welcome. And I echo what Paul said. If we will be walking through the quarterly performance review and talking about the portfolio structure. We'll be talking about the recent changes that we've made, and then the investment policy statement is a document that pulls it all together, that is our guiding principles on how we will manage the portfolio and how we will monitor success and how we will make decisions to replace investments when they need to be replaced and add asset classes or replace asset classes as the markets change. So you'll get a kind of a full picture today of what we do, but if it's probably a little bit like drinking through a fire hose. So if we want to have a meeting, off cycle and we can just walk through it in more detail one-on-one, we'd love to do that as well. So I'm going to ask Stephen to pull up our quarterly report, and I think we'll start there. Thank you, Stephen. And I'll spend a little bit of time just kind of walking through the structure of the report, because I think it's helpful to kind of understand what's in there, not only what the numbers are, but kind of what the contents are. So on the next few pages is a history of the changes that have been made. Just one more page, a history of the changes that have been made in the plan over time. It's a great tool for new board members to review, to see when fund changes have been made historically, when fees have been reduced. It's just, I think, a great, as a fiduciary in particular, a great history. So that would be something that you may want to review. On the next page, this is the executive summary, and it talks about the performance of the plan over time. The top green line here in the upper left-hand corner shows the performance of this fund. So for the last quarter, which was 9/30 to December 31st, 2021, the portfolio was up 3.44%. Year to date, it was up almost 14%. Which is the same as the 1 year period. So year to date will change depending on when we are in the reporting cycle. But the 1 year is the last 12 months, up 13.78%. 3 years, we've averaged 14%. 5 years, averaged 9.6%. 7 years, we've averaged 7.87%. And since inception, we've averaged almost 8% per year. The value of the portfolio is in the upper right-hand corner, a little over 43.5 million, 43.6 million. And then the specific investments in the asset classes are listed in the gray and white column there on the right. And the bottom chart shows how we've been tracking relative to our benchmarks, back to our inception in 2005. So markets have been up, markets have been down, but overall, we are very pleased with the historical results of this portfolio. On the next page, we'll talk a little bit about the markets to try to put some of the performance numbers in perspective. It was an incredibly strong market, especially if you were a large company in the U.S. The large company stocks were up 28.7% over the last 12-month period, and a really strong quarter as well, up almost 11% in the quarter. Now, since this report, if you've looked at the markets, they've come down a little bit. There's been a lot more volatility, a lot more discussion around the Fed tightening interest rates, trying to control inflation, and those measures have made the market a little bit more jittery and increased volatility pretty substantially. Small caps and international stocks have done also well over the last year. Although the things that have struggled have been emerging markets and core bonds or core fixed income. Emerging markets a lot because of China, all of the issues that have been going on there, as well as bonds with the Fed talking about raising interest rates. If you remember back to your basic finance classes, as interest rates go up, the price of bonds go down. And so as we're seeing an increase in interest rates, that's been a negative for bonds in performance. On the next page, we'll look at some of the global economic trends that are happening. The 2021 was a really strong economic across the globe. The U.S., which represents kind of that red portion of that bar chart, was a big component of global growth over the last year. Going forward, the projection is that that not only that growth slows, but also the U.S. becomes a smaller portion of that, which is interesting to keep in the back of our minds as we think about diversification. We think about other areas of investing that we can look towards. Also, the chart on the right shows leading economic indicators, showing that we rebounded dramatically from the throes of early 2020, but maybe that growth or those expectations of continued growth are starting to slow a little bit. On the next page, some of the things that are impacting, as I talked about earlier, is really around the Fed. The Fed has talked about potentially raising rates as early as March. That's pretty much a foregone conclusion in the markets. And again, that's why I think we've seen the markets as jittery as they have been. And the expectation that they will begin reducing their balance sheet, not by selling bonds, but just not reinvesting the proceeds when those bonds mature. So both of those things will lead to potentially to higher interest rates and fighting inflation. If we look at the next page, the headline here is inflation roars back, and that's really why the Fed, as I mentioned before, is talking about raising rates, is to try to get inflation under control. Early in the recovery, there's been a lot talked about. Is this inflation transitory, or is it long set in? And I think as you look, there's definitely some transitory nature. You look at the supplier deliveries index is very high, a lot of lead times that are longer, which is creating a lot of that pricing pressure. But on the next slide, some of the other things that are more substantial or could be potentially more long-lived are labor markets and the impact on raising wages on long-term inflation numbers. And if you look at the chart on the right, there's definitely a worker shortage. Where are those workers going? Why aren't they coming back? There's a lot of reasons. There's a lot more retirements. There's more kind of a gig economy. People doing their own thing their own, trying their own entrepreneurism, if you will, and then people earning more from unemployment benefits than what they were getting paid, so they've decided to exit the workforce. So it'll be interesting to watch those numbers, and we all as employers have been facing trying to find employees, which is a challenge. But the chart on the bottom shows the percentage of small businesses planning to raise their prices in order to counter the rise in wages. And you can see that number is very high as well. On the next page, part of the, so then it's like, okay, if we're going to have inflation going forward, equities historically have been a good place to be in a moderate inflationary environment. But what about now? And the what about now is listed on the left-hand side because valuations matter. The more expensive stocks are when you buy them, the higher the probability is you're going to lose money over the next 5 years. So that's what the chart on the left shows. If you buy stocks when they're priced at 8 times earnings or towards the left-hand side of this chart, you're going to have the odds of you having solid performance in equities over the next 5 years are very strong. In fact, they're 20% average annual returns over that time period. However, if you look at where we are today, which is that red dot, the negative performance or slightly positive performance have happened in the past. So the expectation is that we could have a rougher time investing in U.S. markets. Now, this chart has looked a lot like this even last year. And if you remember last year in equities, I showed you that large cap stocks did tremendously well. So when stocks are expensive, they can get more expensive. When stocks are cheap, they can get more cheap. But I think it's a good indication to say, well, what else can we do with equities? Well, part of that answer is being diversified and investing internationally. Now, international stocks are a lot less expensive relative to U.S. stocks that they've been in a very long time. And so, that's another reason why you can't tell when international is going to outperform domestic or vice versa. So that's why we believe you need to own both, and you do own both in this portfolio. On the next page, on the fixed income side, the expectation for bonds going forward is really muted as well. And part of that is just where we are in the interest rate cycle. Interest rates are really low. The Fed's talking about trying to raise those. So that's going to put pressure. And remember, if interest rates go up, the price of bonds go down. That's going to put pressure on fixed income investors over the next few years until we get higher yields. And then once we have higher yields, then it makes sense to invest in bonds. But, bonds are one of the true ballasts in your portfolio. They do, when equity markets sell off like they did at the first part of 2020, bonds did really well. And you were glad to own bonds in your portfolio at that point. So while the outlook isn't great, again, it's one of the more safer investments that we have access to. And then on the next page, alternatives are another tool to mitigate volatility. And actually, if you remember over the last year, some of the new board members won't remember this, but we made changes in the investment policy to add more diversification to the portfolio, add more alternatives, add things like hedge funds and other real assets like timberland and farmland and midstream oil pipelines. So some of those things help diversify. They also help in an inflationary environment, and they help mitigate volatility, especially when bonds yields are as low as they are. So over the last year, we've actually increased holdings to these within the portfolio as well. And we think they're going to be a big factor in mitigating volatility going forward. On the next page, this is a heat map. So this is now diving a little bit deeper into the equity returns that we've experienced over the last 10 years, actually. And each kind of section of boxes represents a different time period. And because it's a heat map, the brighter the green, the better the performance, and the brighter the red, the worse the performance. So I guess the key takeaway here is lots of green. No matter what time period you're looking at, we have really solid equity results. And that's driven a lot of the performance of this plan. We have a significant allocation to equities, and that's been a good place to be over the last few years. On the next page, if you were to look at what sectors in the large cap stocks in particular have done the best or are driving performance of the market, the top chart looks at just the quarter. So what was driving the market in the quarter was real estate, technology, materials. So as Stephen walks through some of the investments in your plan, those that were overweight to those areas did exceptionally well. Over the last 1 year period, a lot of the same themes with real estate and technology doing really well, but really the best place to be over the last 1 year was energy. Any of us that drive a car or fill up our gas tanks know that energy prices are up pretty dramatically, and that is reflected in one of the best places to be over the last 1 year period. So you and your portfolio have access or investments in all of these areas, and your investment managers are deciding which of those sectors to be invested in at any one time. So does anyone have any questions about kind of that broad walk through the markets? And now, if not, Stephen's going to actually walk now you through each of the investments that you have in the plan and how those have performed given that kind of market environment and outlook.
May I say something right now?
Sure, Jim.
And that would be for the new members, what Wendy's going through right now, hopefully you received this in the packet. Not having a color printer, I've been fortunate enough to have Wendy send me one that's in color so I can see the different colors as we are looking at charts. But this is a really important part. I mean, it's very important to take a look and see what's going on and understanding it. So that's kind of part one of Innovest, what they're doing, or part one of a number of parts. So with that said, I just want to make sure that this is what you're really looking at and focusing on as a board member.
Yeah, Jim, this is Belinda. Is there any way to get a colored copy from anybody?
Yeah, Belinda, I can have one sent to you just like we do to Jim. Maybe I'll get your contact information from Jackie, and then I'll just correspond with you directly.
That'd be great. Thank you, Wendy.
Mm-hmm.
Yes, I would appreciate that too, because when I tried to pull the link up, it did not work for me. So apparently I don't have the software to open that.
Sure, Bob, I will do the same for you. So I'll reach out, I'll get your contact information from Jackie, and then we'll get you all set up. So yeah, you definitely don't want to print this on your own. It's multiple pages, and it'll eat up your printer cartridges. So yeah, for sure. And then when we start meeting in person again, we will bring hard copies with us, so you'll have them as well.
But I would like to state that I am very satisfied with the results of the investment portfolio. Those returns are pretty outstanding, actually, I think.
Well, thank you, Bob. We do too. And really the goal of this portfolio is to earn 6% per year. And, you know, we've been able to meet that. I mean, there's been years that we haven't, obviously, you know, 2008, 2009 markets are down. Some of those were challenging. And, but all in all being, overall, all time periods, performance, you're right, has been really strong. Thank you.
Yes. That's great. Thank you.
Mhm. Stephen?
Yeah, and I'll just quickly introduce myself for the new board member, Stephen Fraley, part of your team here at Innovest, and I work closely with Wendy on the city's retirement plan. So look forward to answering any questions. Anything that pops up, don't hesitate to ask us. That's what we're here for. And I will just start by kind of giving everyone a quick kind of overview of a page that I think is pretty important here. I'm going to zoom in a little bit to make this easier to see. So Wendy mentioned previously, you know, an investment policy statement. These are kind of our guidelines in terms of how to invest the pension plan dollars, making changes potentially. And so this page here, we call it the investment policy summary. This highlights kind of some of the key aspects that we're considering when recommending and making investments. And so across the top here, I kind of say the two gray areas, the row across the top and the column going up and down are kind of the two more important factors. So across the top, you can see, of course, this is a defined benefit pension plan. Our time horizon is long term. Of course, we want to be able to continue to meet those, meet the needs of the participants over time. The actuarial goal, as Wendy stated, 6%. So that is our return goal on a long-term basis. Now, to reach that type of return expectation, we have to take risk, of course. And so you can see the risk tolerance, you know, with this type of portfolio and this allocation, you know, we may need to be okay with the possibility of losing, you know, 15 to 19% in any kind of 12-month period. Of course, those would not be realized losses, but paper losses, but something that we would have to be able to stick with in terms of having that type of volatility. You know, similar to an event like, you know, the first quarter of 2020 when the pandemic hit and the global economy effectively shut down. So just wanted to lead with that. You can see kind of how we're currently invested through that gray column. That's our long-term target allocation. You can see the asset class to the left of it. So you have large cap stocks, US stocks, 21% target. You see mid and small cap stocks in the US, both at a 4% target. International equities, so those are developed international stocks. So think about, you know, companies in countries like Europe, Japan, Australia, some of those countries. Emerging markets, 5%. So think, you know, China, South America, a lot of Eastern European countries, and Southeast Asia. Fixed income, of course, so your bond managers at about 15%, and then some more kind of diversifying or alternative asset classes, floating rate corporate loans, which should provide a nice kind of hedge against rising interest rates, real estate, which is at a 7% allocation, low correlated hedging strategies, which we have at a total of 10%, so 3% liquid, 7% a little bit less liquid. That's a new asset class that we added last year. We talked about this being a difficult environment with equity valuations where they are and interest rates where they are. So how can you combat that, you know, and look to pick up some return without taking on meaningful risk? Well, alternatives is a great place to do that. So we've added that. Other real assets, which is a combination, as Wendy mentioned, of midstream energy, timberland, farmland, and infrastructure. And then private equity, which again is investing in private companies with the goal of long-term, you know, growth and capital appreciation. So just wanted to kind of highlight that because that is really, you know, the most important, the driving factor of, you know, trying to achieve the goals of the pension plan. That is, you know, determining the appropriate asset allocation going forward. And then to the right of this is just more details in terms of the actual investment managers we're utilizing across all of those asset classes, the primary index or benchmark that those investments are being compared against, and then a peer group universe of similar strategies there on the far right-hand side. So just want to pause and see if there's any questions. I wanted to spend a couple minutes going through that in a little bit more detail than we typically would. Great. And then just as a quick follow-up here, Wendy pointed out previously, but this kind of just breaks down, those same targets and asset classes. So on the bottom right here, you kind of see where we were as of the end of the year. You can see the market value column here. You can see the actual allocation here in the middle, and then you can see those targets, which are the same as the previous page there on the far right. And so we did make some changes last year. So you'll see a couple of areas where we're maybe a little bit underweight, or specifically, this asset class reinsurance, we actually eliminated. So you can still see a little bit of allocation there that'll ultimately be fully liquidated and be invested elsewhere, but very close to those long-term targets. Great. And then if there's no questions, I will go into the manager scorecard. And again, a really important kind of tool and reference page for the new committee members. Specifically, this kind of highlights our research and due diligence across all of the investment managers that are being allocated to. We're looking at different criteria, which you can see across the top. We're really taking a look at the organization, how it's structured, what their goals are. We're looking at the people or personnel that are actually managing the dollars, the team of analysts, and the resources there. We're looking at the investment philosophy and process to make sure that they're sticking with that same process and philosophy over time, that it's a sound strategy that we believe it could lead to long-term success. We're looking at style consistency, which just means, hey, if we're investing in a manager for a particular reason, we want to make sure that they're sticking to that same investment style that we hired them for. We don't want all of a sudden someone that's buying Amazon and Apple to be buying, General Electric or some more kind of cyclical or value types of stocks. Asset base, we want to just make sure that there's a steady assets within the strategy, which could, of course, if there's flows coming out of a strategy, that could impact the ability of the firm to manage that strategy going forward. Of course, performance here, expenses or fees, we want to be very conscious of fees, and then we have an overall score here on the right. We also show the expenses being paid for each strategy here, that third column from the right here under expense ratio. And so, when we go through this, you notice a lot of green, which is great. We want to see a lot of green. We'll kind of always see some different colored boxes. Yellow indicates some existing minor concerns. One thing that you'll certainly understand is, from our standpoint, you're going to kind of always see some minor concerns. There's always something happening. There's consolidation within the asset management industry. There's personnel, turnover in some cases. There's short-term periods of underperformance, especially, of course, with actively managed strategies. And so those are the types of typical concerns that will pop up. But any kind of standalone minor concerns, typically, from our standpoint, don't warrant a change. It just says, hey, we need to continue to take a closer look at this particular aspect of the strategy. And so there's some existing minor concerns there. I will just take your attention to the second row from the bottom, Stoneridge Reinsurance. Again, that's a strategy we're getting out of completely, and an asset class we're getting out of. So you see quite a bit of yellow there. That will be removed entirely from the scorecard once all of those dollars are officially out of the strategy. Otherwise, very clean scorecard. A couple of updates. Those are the white squares. You can see organization about just over halfway down, Eaton Vance. That's been upgraded from minor concern to no concern. Eaton Vance was acquired by Morgan Stanley. We feel really comfortable with how that transition's going. And so we've removed that existing minor concern and upgraded that to no concern. And then if you look at the performance column here, about halfway down, there was an existing minor concern for DFA emerging markets. That's now been upgraded to no concern as more recently performance has turned around as we would expect. and has really driven, longer term performance to be quite strong. So that has now been upgraded to no concern. So overall, very good shape. We feel really comfortable with the existing managers that we're allocating to in the pension plan. And then we always typically have commentary here below, and on the next page, again, kind of great reference points for the committee. So any questions on the manager scorecard? Again, it's really just for a quick kind of easy or hopefully easy to digest 1 or 2 pages for the committee to see, hey, is anything happening that we should be concerned about? Have there been any changes, just to, again, keep aware of everything that's going on?
Great.
Excellent. Not hearing anything else, I'll continue to move forward. And again, just stop and pause me at any time for questions. And so now we will get into the table of returns. And so I'm just going to spend the first minute or two walking through this to kind of familiarize and refamiliarize some folks with, the best way to read this. And so you can see on the top left-hand side here, you can see the different kind of asset classes or styles that are broken out. So for example, large cap equity here, you can see there's 3 different managers within the plan that are investing in large cap US stocks. You have Dodge & Cox, Vanguard 500 index, so just passive index approach there, and then Harbor Capital Appreciation, which is a large cap, and then you can see a large cap growth, and then going below that, mid cap equity, small cap, international, emerging markets, and then so on the next page. So we'll go through that in a little bit, but just quickly, everything kind of in green, the green row there, or that olive green color, is the underlying investment in the pension plan. Below that, in that kind of peach or yellow color, is the underlying benchmark that it's being compared to from a performance standpoint. And then below that in white is the peer group universe. So this is the median return of similar managers in terms of how they manage the portfolio. So for example, Dodge & Cox, this is a large cap value strategy. If we go to the year-to-date column here, which is also a 1-year number, you can see very strong performance, up over almost 32% for the year, for the calendar year. You can see the benchmark below it up about 25%, and then the peer group up just over 26%. So really nice performance relative and compared to both the benchmark and peer group. And so there's a lot of numbers in parentheses. These can be a little bit intimidating, but the number in parentheses is the percentile rank of the strategy compared to its peer group. So in this particular case, Dodge & Cox up almost 32%, the peer group up over 26%. Well, it fell in about the top 5% of all managers during this 1-year period. So the lower the number in parentheses, the better. So that's, again, kind of an important metric when looking at comparison of across the different strategies. And so, on a short-term basis, for example, Dodge & Cox, this is a perfect example. Not a great quarter, right? Relative to its benchmark and peer group, it's actually in the 90th percentile. You can see it underperformed, but look at the long-term numbers. Again, we want to reiterate, long-term is what we're focusing on. So really 3, 5, 7, and even 10 years across a lot of these strategies. So just wanted to highlight that as kind of hopefully a good base here before we kick into some of the performance. So hopefully you found that helpful. Really strong kind of performance, in the quarter was a little bit mixed, but, really focusing kind of on the year-to-date numbers and beyond. Strong performance, I just mentioned Dodge & Cox. Harbor Capital Appreciation, that's a large cap growth manager, underperformed quite a bit in the year. The main reason is just how the strategy was allocated. Some of the areas that were really high growers for them in the previous timeframes hurt them a little bit in 2021. But again, focusing, if you go out to 5 years, 7 years, you can see really strong performance, outperforming both the benchmark and peer group and all those other timeframes. So again, knowing that these are actively managed strategies, they're trying to beat the benchmark, so they have to be different than the benchmark. And so there's going to be periods where they both underperform and outperform. Mid-cap manager, John Hancock Discipline Value, that's a mid-cap value manager. Again, shorter term performance, underperforming, but again, long-term outperforming quite nicely. Harbor, that's small cap growth. Again, long-term performance, very strong there as well. On the international side, so outside of the US, I have both a value manager, Thornburg, and a growth manager, American Funds, both with very strong long-term performance. Both have some emerging markets exposure, which actually hurt them from a performance standpoint more recently. Wendy did mention that for the quarter and for the calendar year, emerging markets was the worst place to be in the equity market. So having a little bit of exposure there hurt them, but we allow we let those managers allocate to emerging market stocks if they think that there's better growth prospects or better investment prospects within the emerging markets up to a certain extent. And quickly flipping to the next page, emerging markets, I just wanted to touch on DFA because this was a manager that actually did have a minor performance concern, mainly based on the way this particular manager invests, the types of companies and sectors that it invests in. And so it had a minor performance concern, but recent performance has been really, really strong, particularly in the 1 year period, up almost 6% compared to its benchmark was down 2.5%. And the peer group, which is down 1.5%. So really strong outperformance. That's helped boost some of its long-term return numbers. So that's really one of the main reasons why we stick with the managers as long as we think that the investment process and philosophy and the personnel are still intact. Fixed income, 3 different managers here. Dodge & Cox Income, that's the main portion of the fixed income allocation, down a little bit year to date, just under 1%, but longer term, again, really strong outperformance. To complement Dodge & Cox, which is more of a core manager, we have both the PIMCO Dynamic Bond and JP Morgan Strategic Income strategies. These are more opportunistic, meaning that they're going to kind of go anywhere to pick up returns. So if they want to invest in more high yield because they see opportunity, they can do so. And you can see that really helped performance in the calendar year, both of those being positive for the year where the benchmark was down 1.5%. And so in total, you can see that really helped fixed income performance as the total fixed income portfolio still down about 0.5%, but outperforming the benchmark by about 1% in 2021. And then moving down to some of the alternatives, real estate, Principal U.S. Property Fund, really strong bounce back in 2021, up 23, almost 24% in 2021. So great performance there. Liquid low correlated hedging strategies. Again, the way we look at these for some of the newer committee members is with the low interest rate environment, we expect these strategies to provide strong diversification, but to outperform fixed income, over a longer period of time with a little bit more volatility than fixed income, of course, but we think it's a really nice risk-return trade-off for these types of investments. So very low correlated to the rest of the portfolio, meaning if equities go up or if equities go down, these strategies kind of act on their own, if you will. So nice performance for the year for both of those strategies. And then going to the last page here, Tortoise MLP and Pipeline, that's a midstream energy strategy. That was the best performer in the year, up almost 41% in 2021. You saw, Wendy mentioned, we've all noticed the increases at the gas pump. Well, they're really a direct beneficiary there. So we saw energy prices bounce back. We saw demand surge that ultimately led to pipeline companies performing really well. And then just for everyone else's kind of awareness, this inception date on the far right can show, some of the strategies that we've recently gotten into. So versus capital real assets, we just added this mid-year last year. This is a strategy that invests in physical timberland and farmland and infrastructure. So again, thinking about protecting against rising interest rates or inflation, those assets really typically do well in an inflationary environment. And then private equity, Partners Group private equity, you can see down here, we don't even have any performance numbers yet, that was just funded in December of last year. So once we get a little bit more time under our belt, we'll have some performance numbers for Partners Group. So all in all, for the quarter, up about 3.5%, as Wendy mentioned. Year to date or calendar year 2021, up just under 14%. And then you can see some of those longer term numbers as well. So I feel like I just said a lot, so I'm going to pause and just see if there's any questions or concerns or anything that sticks out.
I'm just going to make a comment, Stephen. When you look at the actuarial of the plan and how many people are retired, how many people are in the plan, and how many new people are coming in, that's why we're looking at, or why the past board came down to a 6%, which grew the plan and funded the plan over time in what we considered a healthy and conservative way. So I guess, in my opinion, this is pretty conservative what we've done, but that's been pretty healthy in what Innovest has recommended and what we've done over the years. So that's what you're looking at, and I think a question that came up for me when in meeting earlier in the week was, are we still offering this plan through the city and to new employees?
We are.
Who was? Sean, did you answer? I heard somebody answer. I didn't.
Sorry, I wasn't sure if you were done. But yes, we do offer this plan to new employees. They have the option of either enrolling in NERP, or they have the option of doing the defined contribution plan, which is the NEMP plan.
Yeah, okay. Thank you. Okay, thanks, Stephen.
Yeah, no, of course. And I think that's a great segue because, you know, there are still potentially new hires choosing to, you know, to enter the NERP plan. And so, again, that's part of, you know, why we think, you know, we have to think long term about this. We want to make sure that this is sustainable and ultimately, you know, can pay out those younger members as well.
And Stephen, I was just going to take you to the next page because that's one of my favorite in the report, because it really kind of puts because I mean, we look at all the percentages all the time, and I mean, what does that mean in dollars? And I think this is where you can see the impact on the dollars. And if you look at, you know, since inception or 10 years, you know, we started with 28 million. We've paid out 13.8 million in benefits. And we've had market value increases of 29 million. So this is what the investing has really done for this plan, because essentially we've paid out all the benefits that we needed, plus we have grown another 29 million. So these are, you know, while the percentages are important, I think, you know, at the dollars, and what Paul at GRS does is he takes the dollars and figures out, you know, how are those benefits going to be paid going forward. And so I think that's, you know, this page is one of my favorites.
Yeah, that's key to keeping this plan in business. And I am very satisfied. I mean, I'm ecstatic at what I'm seeing here. And the question I have is how much of our plan is funded and how much of the city having to put into it out of their budget. And I don't know who would answer that.
Paul at GRS would answer that.
Yeah, that's what I thought.
Yep. Oh, All right, good. Thank you, Paul, for staying on. I got nervous there for a second.
No, so the plan right now is about, we'll call it after this 14, I just opened up the projection from last year. So after this approximate 14% return, I expect that when I do the valuation as of 1/1/2022, we'll be about 84% funded. And then the contribution from the employer will be somewhere in the neighborhood of around $1 million. So that's what we're looking at right now. So really strong results, and then what this projection is also telling me is that we're on a really great path to be fully funded by really 2035. So within 13, 14 years. So that's really impressive.
That's really great.
And then the other thing to note for the newer board members is when we talk about this rate of return, the 6% number, that's actually quite a bit ahead of your peers. But that's only part of the story. Not only are we at 6% discount rate, so it's on the relatively conservative side again with your peers, but your funding policy is really the strongest in the area here. We're looking at 15-year, or really now we're down to 13-year level dollar. So it's really as strong as it really can be, and that's a testament to the decisions that the past boards have made. And so we're on a really great path. So it makes me happy to see this 14% return, but it also shows us too that we're set up to handle some volatility in the future. We're not going to see 6% returns on the dot. So we've got policies in place to handle that.
Yeah, this is fantastic. Thank you. I appreciate that.
Sure, great. And I did see a note come across that the meeting is only scheduled for a few more minutes. I'm hoping that doesn't shut us out. I think we might run over a few minutes going through the investment policy statement. Okay. If there's no other questions on the report, I think the next thing we wanted to do is just run through the updated policy statement. And so Wendy, which one of those documents would you like me to pull up?
How about just the summary of changes? Because what we did is we want to move your investment policy statement. You've had a version that was written well before we got on board, so that was prior to 2005, that we've been updating on an ongoing basis. But when we made all of the changes last year in some of the new asset classes, we thought, well, maybe we could move it to our template, which is a template that's been reviewed by retirement plan attorneys, and we really feel like it's a great template. And ultimately, if we're using it to kind of monitor and make decisions and help the board make decisions about investment, we felt that it was a good time to move it to our template. So what this page shows is just a summary of really the differences between your existing policy and then the new policy. And you can maybe read it. I'm not sure if you've read it beforehand or if you want to read it after this meeting and come back at the next meeting, or if you're ready to vote today to accept the changes. But there's really just minor changes. And we can answer any questions. I don't think I need to walk through each one, but if anyone has any questions, I can.
Does anyone have any questions?
Bob, can I just make a point here?
Yes.
We did go through, or we had this in our packet for the November meeting also, and we put it off until the next meeting, not fully realizing that John and I would both be gone then. And I guess I'll just leave you with my recommendation is that we should move forward and approve this. So if people have looked at it at all or anything, I would recommend we approve.
Well, that was going to be my next question. For those of you who have been on the board, what questions or what advice or what directions do you think we should go? And my overall impression is that I would agree with Jim that we should approve it and just move on. But if anybody is not comfortable with that, I'd like to hear from you.
Actually, Bob, I was here when the changes were made, and I was very impressed in the changes and the direction that they went. So I would be totally comfortable with approving this.
In that case, the chair will entertain a motion to approve this as presented. Do I have a motion?
I move to approve.
Rita
I
has
second it.
moved. I have a second. All in favor, say aye.
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 Aye. I don't know if I'm supposed to vote, but I think it's great. We will consider the motion carried unanimously then. Thank you.
Well, thank you all, and that's the end of our report.
Fantastic. Yes, I would like to see a hard copy of that or see that so I could peruse it more closely. Thank you very much.
Yes, I will. Thank you.
Okay. Old business we have coming up is the NERP Attorney. What does that involve?
What that involves is just me passing on the email from John regarding who he recommended as a replacement attorney. Our former attorney, NERP has its own attorney.
Right.
That from time to time we need. But the records were forwarded on to a firm, Reinhardt Law, and the attorney's name is Jessica Culotti, Culotti. And I believe that the city's attorney, the city attorney, has this information and actually hunted it down before I talked to her. So that's who John had talked to and evidently discussed the account with.
So are we to vote to approve this attorney then?
No, it's just informational.
Okay.
And this actually came up, I think it was a couple years ago. COVID kind of screws things up with getting isolated, but I think it was possibly a year and a half ago. And there was an incident that came up that wasn't, that the board wanted NERP's attorney involved with. It had to do with some recommendations that came about changing the plan in a big way, which the board was pretty unanimous about not going with, and wanted our attorney involved with it, with any further discussions regarding it.
Mm-hmm.
But that problem went away.
Okay.
So Jim, can I ask a question, Bob? Jim, the attorney, do we have them on a retainer, or whenever we need them, we just contact them and then?
No, I think as needed.
Okay.
Because they have the file and the records of what we have done in the past or what law stuff has been done.
But to
But
follow up on that, do
I-
we
I
pay
don't-
a re- do we
Jim-
pay a retainer fee or not?
I don't know. That would be a staff question. Jim Phelps, do you, I don't recall us having to utilize the attorney too much
Yeah.
in
I
my,
do not. either. Not since I've been on the board.
Does Victoria have an answer to that? She has her hand raised.
I do have an answer to that. Well, I think I have a partial answer to that. So our records in the city attorney's office reflect billing statements from the Reinhardt firm when prior to, I think it was Mary Bauer's retirement. She used to be
Right.
the private counsel. So we have those billing records. We do not have a current retainer or an agreement for professional services with that firm currently. So one issue that we wanted to request authority for from the board was to, one, request the law firm's file so that we have records of the work that's been performed to date. And then two, I mean, if there is going to be ongoing legal services provided from this firm, we can help with drafting a professional services agreement or whatever standard contract you would need to go forward with working with them.
So
thank you, Victoria. I didn't realize who you were. So, and now I get it. Okay, yeah, she's one of our assistant city attorneys. So,
great.
thank you.
So now, do we need a motion to give you that power? Then, am I understanding that, Victoria?
That's what we would be requesting. So yes, if we can take that to the board, and to the extent that the board wants to move to approve that, to bring it forward with a motion and then a vote, so that we can, on the request of us obtaining the file from the Reinhardt law firm.
Can I ask a question? Would that be a conflict of interest for this board? Because the attorney for this board would be different than what the city would do.
That is a good question. The part of the reason why this has come to the city's attorney's office in any way, form, or fashion is because we've been getting questions about how the retirement plan is operated and how it runs, and questions regarding benefits from the employees. So that's kind of why we wanted to get access to what legal advice the board, the attorney for the board has provided. But so before we can answer, I guess, to address the privilege and confidentiality concerns, at the very least, the board should have access to the file, and then can make that determination about whether or not the city attorney's office can have access to certain portions of it.
I think that might be a good idea, because I do think part of the reason in a few years ago, it could have been even 4 years ago, it was, I think, kind of a conflict with city employee that was creating the problem. So I'm thinking that it might be good for the board to have access to that first.
Yes.
So let's table it.
So,
Well,
am I understanding that we should table this, or should we have a motion to bring this to the board, to bring this file to the board?
So Victoria, is there, do you know how we would handle that?
You mean getting the legal documents? Oh, yeah.
Yeah.
So well, you would write a letter to should this motion be approved, allowing the board to have access to the legal file from the Reinhardt law firm. The request would be made by letter to the law firm, requesting the file and access to it. And then to the extent the city attorney's office or other city employees needed to address questions that were within the file, that would be under the board's control. That'd be something that either board members themselves can answer at the appropriate forum, or alternatively, the board could move to allow portions of that file to be accessed by city staff.
Okay. Thank you.
Of course.
It seems to me that we should entertain a motion to gain access to that file by the next meeting. And I think that's a no-brainer, but I want to see if I'm understanding all of the ins and outs of this. So I would entertain such a motion or discussion leading up to it. What do I hear?
So is it the city attorney's office that has the information of who the attorney is?
Yes, so we do have the contact information for who we understand the current attorney is, who took over Ms. Bauer's workload and access to files after her retirement, and that, as Councilman Woodward stated, was Jennifer Kulati. So yeah, the contact information is within our control, and we can certainly provide that to the board.
Then I will entertain a motion that we go forward to gain access to that file.
Jim Phelps, I so move.
Do I have a second?
I second.
All in favor?
Actually, can we discuss first?
Yes. Is there any more discussion?
Is there, so then if we do that, can we give permission to Bob to get that information and distribute it to the board? Is that legal for us to do as a board?
If we're asking, and I'm just going to state this, if we're asking for the board's permission, it would seem to me inherent in that we would have permission to share it with every board member individually. Am I correct?
Yeah, I'm wondering if it may make more sense to have Jessica come to your next board meeting with a summary of what the file is and stuff. I have no idea how large this file might be. You know, you may be asking for a folder or a file cabinet.
Well, then the other question then is, what is the expense of doing that?
Well, it would be an expense to NERP. And that's why I'm suggesting that maybe you ought to ask to have her come to a board meeting to have
Jim,
her input.
that does make sense. What we really want is to understand what is in their possession and what the meaning of that is. And that would overshadow any expense. I would expect that we would pay, maybe as much as 5 or 10 hours of attorney time to do that, but it would certainly give us the history and the background that we need.
And the logistics of that, it would probably be an executive session, correct? only board members and the attorney. That might be better if it was an in-person meeting also instead of a Zoom meeting.
Victoria, what's your thinking on that?
To Councilwoman Russell's point, yes, it would be an executive session because you'd be receiving consultation from your legal counsel. So that would be definitely an executive session. But in terms of having the attorney come and present to the board, I think that would be perfectly fine. If there is a concern about cost and expense for the attorney's time to be present at that meeting, perhaps prior to doing that, you can request a summary of just a written summary of what material is within the file to get a better sense of that, and then to assess from that point whether or not the attorney should actually come and present.
Yeah, I think that would be the best way to proceed. And I think that would be within the limits of the motion that we have on the floor. Or do we have any more discussion on that?
I think you may want to ask Sean what his thoughts are.
Sean? Sean, I think you're muted.
He may be away from his desk.
Yeah, he may be. Well, given that, I still think this is the best way to pursue this, is to get a written summary and then proceed from there if we need an in-person meeting, which would be executive. Victoria, if we got a written summary, could that be shared individually with no problem? Or if we sent it out, would that be considered a meeting under the sunshine law?
I would be considered, I believe it would be considered a meeting. Which I'm particularly mindful of given some current events in Douglas County. So you're saying whether or not that letter can then be shared individually with the board as opposed to just
Right.
the attorney
Right.
communicating with the chair.
As a background or whatever. How would that work? Do you know?
I'm thinking that. I believe that's that if the letter were privileged and confidential, and came from the attorney to the members directly, that would be something that could be still protected without waiver of the privilege.
I think so too, but yes. So let us proceed in that direction. If there is any hiccups or hitches, we will have to deal with those as they arise, I think. Do we have any more discussion?
No.
I think I just want to make the point too, that as for the new board members, this is a fiduciary type of position. And it gets really difficult for example, for Rita. So she has a fiduciary obligation to the city of Inglewood and one to NERP. And while she is working with NERP, that fiduciary obligation has to stay there. And when it's with the city, it's separate from that. So,
Yeah. Okay, I will call for the motion. All in favor, say aye.
Bob, I think we need to make sure that the motion is
Aye.
stated
Okay.
correctly with written summary, and that it would be underneath the privileged and confidential directly to the members. I think you need to put it that way for a motion in this
Okay,
case.
Do we need to withdraw the motion that's on the floor and remake it, Victoria?
For clarity, I think that would be best.
okay. Well, let us withdraw the motion then. I think I can do that as a chair so that we can restate it. And Victoria, could you state it for us?
Yes. My understanding of the motion would be for a vote to request the Reinhardt firm to provide a written summary of the legal file in its possession and to submit that written letter summary directly to the members under privilege and confidentiality.
Yes. I believe that's my understanding of it. Do I have a motion to state that motion as stated, to accept that motion as stated, and then I will need a second.
Jim Phelps, I so move.
Second,
Shelley Fritz Pelly seconded.
all in favor, say aye.
Aye.
Aye. Any opposed? Motion is carried unanimously. Okay, so we will expect to hear from you before the next meeting then, Victoria, right? Great. Thank you. Do we have any other discussion? Any members?
It's a time where I would ask, we move the meeting to 4 o'clock.
You would like it at 4 instead
would.
of 3:30?
It would help me tremendously.
I would have no objections to that. Does anyone else have thoughts, concerns?
I don't have any objections.
That would help myself tremendously also because we have trainings until 4 o'clock.
Until 4?
Yeah.
Okay, I will accept the motion to move it to 4, to start the meeting at 4 o'clock on May 10th.
I make a motion to move our meetings to 4 o'clock.
Great. Do I have a second? Shelley?
I second that motion.
All in favor? Say
Aye.
aye.
I
Aye. The motion
Aye.
is carried. We
Thank-
will meet May 10th at 4 o'clock.
And hopefully we'll have information before then, correct?
Yes, yes, and we'll know if we need to hold an executive session or meet or whatever. Hopefully before that, we can schedule that.
Okay,
Okay,
thank you. Welcome.
great. Thank you. All in favor of adjourning, say goodbye.
Goodbye.
Thank you all.
Bye.
Goodbye.
Very good.
Jim, thank you for everything.
Thanks, everyone.
Thank
Bye-bye.
you.
Thank you, Wendy and Stephen.
Absolutely.
Yep,
Bye.
thanks,
Rita.
thanks, Rita.